How is everybody? Today we had this schedule of talking about cars. I know a lot of times in the very beginning of the year, people are very hot with electronic cars, trying to figure out what credit that is. We briefly covered that here as well. But today we really want to introduce the tax concept around cars. So, every time people are discussing about cars related to business, there's a lot of concept coming in. For example, who should own the car? How should I buy it? And after I leased it, what happens? Is there any difference between leasing a car and getting a car bought outright? So all of these questions, boil down to the very bottom line. We're talking about dollars, right? You're trying to figure out which one would yield the best tax deduction for you and how you're going to go about doing this. So this is today's objective. So before we get in there, I do want to share with you our resources that is out there for you. You probably don't know, but today you will. I saw quite a few of you are on our YouTube online and live and you're watching me. Now I want to lead you to the website. So now what you are looking at is communitycpa.com website. And on this website, you can go ahead, make appointment with the partners in the firm. And you might notice that I clicked appointments and then it brought up these people and you can see there are 5 of us and we are all in different areas and I am the managing partner and the CEO for the firm and you can book my time. And when you click me, and you will see my calendar, what is available. You probably noticed that you're available at 8 p.m. Yes, and my appointment is booked online. If there is availability, you will see. If you don't see availability, those are the only one that is available right now. And we do charge our appointment, but I have never ever had anyone complaining about the charges because we are value driven and you will get what you want when you come to us. Every webinars we do, like this one, you will find the copy of the content on YouTube channel. Our YouTube channel is Community CPA, and you can type in Community CPA in YouTube search bar. You'll find that. So subscribe to our channel because we will send you what we talk about every week. We literally have about 3 to 4 webinars coming online every week. 1 in Chinese, 1 in Spanish, the other 2 in English. And Saturday 3 p.m. is my time. And I'm always here on Saturday 3 p.m. You probably wonder, how could you do that every Saturday? In case I couldn't do it on Saturday, I actually will record it. So it will be live just like right now. But today I'm here with you in the same time zone, in the same time space. You are there, I'm here, and I will transfer my knowledge related to vehicles and cars to you. And on our YouTube channel, and you can click the subscribe button to be part of the notification. But you can also just search the item in here. So for example, you're wondering whether you are an employee or contractor, if you are one of those, or if you want to give your people who work for you that status, you're not sure how to determine that status. You can literally type into contractors right here, like how I do it. If you press enter, all of the things related to employee versus contractor and the videos will show up. Right? So we have over 1,000 videos here. It's all educational, no kidding. We don't do entertainment here, but what you got is really a very easy to understand knowledge. That's kind of our trademark. And English is not my native language. I learned it, so I don't speak Harvard vocabularies all the time. So our language, our way of explaining things, just very simple. And most of our clients would come to us because of that very reason. They have a complex cases, but then when they come to us, it's suddenly really clear. So now let's get going with today's topic. I am sharing our PowerPoint. It is not that I can just talk to you with my face on the screen, but I want you to watch our PowerPoint. Sometimes the screen you see, you can take a snapshot of that because it is very useful, especially when we use chart, and you will find values on getting hold of these information. So today's topic is tax considerations around business use vehicles, and I am talking to business owners. So I am here to tell you the variety ways for you to account your business use vehicles in different way, different avenue, and arriving different goals. Okay, now let's get going. Prior to we start getting into driving the vehicle, and I do want to introduce myself. And a couple of you, I don't think you have been to my channel before. You're new, and I am the CEO and also founder of Community CPA. Community CPA started back in 1998. One client, one person, and to today we have about 40 professional staff, and we have more than 10,000 clients and 4 geographical locations. So we are Midwest driven, but our client is all over the country. So to let you know, and I myself also served on taxpayer advocacy panel. This is a federally organized not company, association, a advisory board to IRS. So I was on that for 3 years, and I am an author too. I wrote this book called Appointment with Ying at 8 a.m. 8 a.m. representing the beginning of the day, the starting of your business. So the book is all about how to start up a business. Because of the clientele we serve, and it's a collection of my appointments. So you can imagine the storytelling part of the book is amazing because you're gonna see a foreign student, how they do business, people without status, how they do business, and the people with status, how they do partnership. All kind of combinations are coming in. It's a book that had received so many good comments in the public space, so I would like you to look into it. It's on Amazon. I just finished writing the second book. It's Appointment with Ying at 10 a.m. Yes, at 8 a.m. you started the business, but what to do after you started? You grow the business, right? So the second book is about growing. How to grow from a teeny little business to a big one. How is Community CPA grow from one person, one client to over 10,000 clients and the 40 professionals? So that journey. So we reflected all of that journey in one book with our own journey and all our clients' journey. That the one that we can share and worth of sharing. So that again is coming on the market very soon, and I finished writing back in March. So got the cover designed, and Grace is the one that does all the graphics in our firm, and you just need to know her name. Her last name is Young, and she designed the cover for this second book and as well the first one. So we have 2 more books to go. 2 p.m. merger and acquisition. 6 p.m. retiring from your business. So those 4 books, 8, 10, 2, 6 timeline really just give you the life of the business. That's what my intent is. I want to walk through the life of business and with the format like a book and present it to you. So if you are a business owner, why not? Look at how other people is walking through the journey ahead of you so you can follow the suit or you can be more innovative, right? With that, the last announcement I have is no responsibility disclaimer because the service is free and we provide to our valued clients. So there's changes, even tax rules are not the same from one year to another. So knowledge could outdate. But just so you know that, always look at our video with a timestamp. Some of the information never expires. Even we change presidents from time to time, but the knowledge is still the same. But some of those things are changed a lot because they are federal government initiatives or local government initiatives, those initiatives are come with circumstances, right? So they're not always available. So you want to be sensitive with the time stamp. All right. Verbiages around cars in business. So I listed those for you because, you know, people would come to ask about car vehicle questions from different angle. And sometimes they're like, oh, Ying, I'm so confused because someone just told me that I can deduct the whole car. But why? My accountant said that, no, I cannot. You know, I don't understand why. So this is where the question was approached from different angles. So what we are trying to accomplish today is to give you an overall view of how you look at the car and really in the fashion of business use. So I'm not talking so much about your personal car, personal use. I am talking about business use, no matter whether it is company-owned one or it's a personal one. So the verbiage around that concept is ownership, right? Whether company owns it or you personally owns it, and how you pay for it. It just matters because sometimes we have to come up with lump sum money to buy a car, but sometimes we lease it, so we don't really pay anything out. So how you get the car, that really kind of dictates how you deduct it. Of course, the type of car. Some people goes, oh, Ying, I don't want you to forget. My car is over 6,000 pounds. What does that mean? What does that has anything to do with the deduction? So we want to cover that. So actual deduction, there's a term for that, right? So you were like, you know, what is that? When do I use that? So actual versus mileage, right? Standard mileage deduction. Then you hear people talking about this 19,200. Oh, this year it's going to be 20,200. What is it? So those are just throwing around concept for people. We're not grasping it, but I am going to organize it in your head for you today. And a 5-year depreciation, really? Only 5 years? So there are people asking about that. And they're being audited by IRS, and they right away the IRS was nailing you on your mileage log. IRS goes, well, you didn't put in purpose. Why are you going from here to here? Oh, why are you starting from your home office and to the office? That's not deductible. And so all of these things that we want to talk about to help you to simplify your understanding of the vehicle. Now, I have this chart. Just last minute, I realized that the chart is very light. It is not very dark for you. And I think you can still see it, folks. And if you snap a picture of this one, you definitely can see it. So this is an illustration about ownership. I want to really hone in on this one because a lot of time we, small business owners, are not taking advantage of that. So let me explain to you. When you walk into a car dealership, you want to buy a car. And you want to buy a car because you don't like your car anymore. You are a small business owner. You made money. You feel like you can afford a car. But you also want to get this car to be deducted in your business so you pay less taxes. So logical, right? We're just thinking that way by birth. It's like we don't need anyone to guide us. We think that way, right? But now, how do you do that? How do you buy a car and have company digest it? And now you. So that is ownership. So when you buy a car, it is time the number one decision you make, regardless of whether you buy, you lease it and you loan it or you buy it outright, the number one decision is who is going to be the owner of the car. And if you have a business, and I would recommend you to look at the business-owned vehicle. So what do we look at? If you put the car under business title, then you can do deductions from head to toes. Your car wash, your car registration, your car tax, and your car gas, of course, car insurance, and car decoration, and anything you can imagine related to your car because it is a business asset. So suddenly, everything related to that is business pays, right? Of course, you could argue that, oh, Ying, I drive business car to see my mom, 200 miles away. So I don't think that's business. Good idea. If you have put that under the business car category and you use the car for personal, you need to reimburse your company for your drive, for your usage. The best way to do that is just to use IRS mileage rate and write a check back to the company because you use that for personal purpose, right? Otherwise, you should be deducting anything, everything, and even if you like certain, mats in the car and you want to decorate your chairs, everything can go into the company expense. Of course, if you say, no, Ying, cannot do it, and I need to buy it under my name. I don't even have any cars under my name. If I just have a business vehicle and for business purpose, I don't have a personal car with me, that would be raise an audit flag. You are absolutely correct. Normally, when you have a business vehicle for a business, you really should have already a personal vehicle that allow you to drive on the personal purpose. Otherwise, IRS expected a lot of reimbursement from you to the business, right? So if it is a personal vehicle, yours, not business, then you only have two ways to deduct your business-related expense on the car. So number one, you need to know what is the percentage that your car is used for business. So using that percentage times all the car expenses, like the one I was talking about, insurance, gas, and everything, then you come up with an actual method, business-related car deduction, because you're using actual method, right? So you own the vehicle, and you know the percentage you use for the business. Normally, the percentage was calculated based on personal mileage and the business mileage, okay? So let's say business use is 50%. Then your insurance is $1,200. Obviously, the business expense should cover $600, right? So you add up all your actual expenses times the 50%. So you will get the actual expenses. Now, if you have a personal vehicle, you didn't do actual, you did a mileage, then I wrote down 5 elements. You have to have them, otherwise IRS auditor won't let you go. They will deny your claim. So the 5 elements, the date you travel, the purpose of your traveling, and there's the starting location, ending location, and total mileage. And you may say that, oh, I don't need total mileage because I can just Google. Do you know that the Google distance is always shorter than our real mileage? You didn't discover that, didn't you? And I have never had any time for Google mileage to equal the real mileage. So for that reason, maybe because I never can find place, I'm really bad with looking for locations. So that's one of the things I kept as a secret. You don't really hear me talking about that. I'm not good with locations. And I rely on GPS 200%. If GPS is wrong, and I will go to the wrong place. If you want to sabotage my trip, you just label my GPS into a wrong place and I'll go to the wrong place. So that's how bad I am on the driving side. So I rely on that real mileage I drive. I could be looking for a client. There's a road construction. I drove 20 miles extra, right? So that real mileage counting is important. The IRS like to see you claim more and be accurate. Of course, if you don't have mileage log and then you got audited, IRS also allow you to reconstruct your mileage claim. They do allow you, and you just need to tell them that I didn't have it. I'm going to make it up based on my calendar, and would that be okay? And if the auditor goes, it's okay, then you go ahead and do it. It's called a reconstruction of mileage log. All the reasonable auditors would allow you to do. And of course, the best practice is for you to keep track of that every day or writing that on your calendar, right? So you may wonder that, okay, so I have my personal vehicle and for 1 year, I actually didn't drive that much. I want to use actual method. The other year I drove a lot. I want to use mileage method. So is that okay? No, that is not okay. So IRS regulation said for the same car, you can choose one method, but you cannot flip-flop around. So if it is standard mileage in the first time, it is mileage forever. The only time it can change is you sell the car to the company. Making it a company car, you can do actual, right? Otherwise, you can't. You cannot sell to yourself. Goes, I start all over. Now it's actual. No, that doesn't work. So ownership is interesting, right? So now don't forget, when you put cars in the company, not just actual expenses, you also enjoy the depreciation. The depreciation piece comes in, and one, you own the car. So if you own the car, you can depreciate. And in 2022, last year, the first deduction was $19,200. In 2023, this year, if you bought a new car and for business, and you are putting it in business use, and you're listing that as a business asset, the first year deduction is $20,200. That gives a huge deduction, am I right? So it really depends. Maybe you got a 2023 year, you make a crazy amount of money, but it's just 1 year. You know that next year, you're not gonna be like that. Then what's wrong with you purchase a new vehicle and take advantage of that $20,200 deduction, right? So that's kind of that related to ownership. Now, let's look at another chart. We had those verbiages we were talking about, so I kind of want to bring them out into these charts so you recognize them where they go, right? So now with this car, and I want to talk about how you paid for it. How you paid for it has something to do with how you claim it. So let's look at how that works. And this is another hidden view for our taxpayers. A lot of times, taxpayer would say, Ying, I loaned, I put down $5,000, I borrowed $35,000, I bought a new car. Can I deduct it? I didn't pay for it. I just paid $5,000. So those are the questions because the taxpayer has not seen this chart yet. So I'm laying it out here for you, for all of you, and then you can understand my thought process. So let's look at it. Remember, we already talked about the ownership. Company owns it or personally own it. There's only these two ways you can go by, right? And sometimes you may say that, oh, Ying, that's not true. When I went to buy cars, the dealer told me that I cannot use company name because my company is too new. They want me to put my name on it too. In that case, you had both company name and your name on the title, then you are at liberty to decide which way you want the car to be. I would put the car with the company, knowing that your intention of the car to be under company was solid. And just because of circumstances, the car dealership are worried about credit rating. That's why you ended up having your name on it. So that is just totally fine. We still consider that as a company-owned vehicle. So if it is company-owned vehicle, you only have 3 ways to buy it. You either leased it, or you bought it outright with cash, right? Or you loaned it. You borrowed money to buy it, right? Those are the 3 ways. Let's look at these ways. So if you leased it, this is where a lot of knowledge need to come in. When you lease a car, there's 2 types of leases. One of them is you lease, then you return the car. The other type of lease is you lease, you buy it for $1, right? Those are different type of leases. You want to know which one you have. You have to make that decision at the time we're filing taxes, right? So you may say that, well, my dealership said that I can decide it later. Okay, You can decide it later. That means your current lease is lease, give it back. Because you did not have the final clause saying that you can own that car. As long as you don't have that, you're considered as lease. So look at this. Under the lease, I have two ways to go down, right? One of them, I call them rent. It's no different from rent. Just like you rent your space, the landlord not going to give their building to you. You just rent that space. So same thing with the car. If you lease without owning it, you're just paying rent. You rent, right? So that rent expense, because it's business vehicle, that rent expense is 100% deductible. See? Then you say, well, Ying, what about the other expenses? Of course, the other expenses is a business vehicle. It belongs to business expense. So no need to say that. So we know that the whole car is a rent expense plus other expense. But what about you got a lease that is rent to own? Like eventually you own that vehicle for $1. If that is the case, not only you can deduct the rent, you can deduct the actual, you can also depreciate because you have that vehicle. But your vehicle value is what? It's $1. Yeah, because that is what they're going to give you, right? In the very beginning, it has all become a lease payment and rent deduction. So you got $1 in the back. All right. So now, what about you bought it outright? So you just give them the check, company check, all right? So the company bought it. And in this case, you should just be treating the car with actual expenses, depreciating it. This is where, because it is company car, it has nothing to do with your personal. So this is where we can deduct $20,200 in year 2023. We could deduct $19,200 in 2022, which the taxes is still not all done yet. A lot of business owners are still not doing their taxes yet. So you still have a chance to think about how to treat the vehicle you bought in 2022. All right. So now, what about it is a personally owned vehicle? And even more clear, it is a vehicle I had for several years already. I just established a business right here. So I think that's my personal vehicle. Sure. And right here, I would say that you have a chance to sell your vehicle to the business, don't you? Because you got your vehicle for a long time. Now you establish a business. Your business needs your car, and you want the deduction for your business. Then you sell your vehicle over to the company. That can be sold, okay? So this is where you move your car into the left-hand side category. Now, let's say you have it under personal name, and you lease it, and you lease to own is another option, right? Lease to own, or you bought it with a loan. You know, bought it with your personal money is too simple. We didn't list it. But if you leased it, because it is your personal vehicle, majority of that is for your personal pleasure. You just might be the kind of person that always want to get the newest car. So you just let go of your car every 2 years, getting on the new model, and it's just so cool, right? So I have a client like that. And he always just leases his personal vehicle because it is so easy to lease. And he didn't drive that whole lot. And so he can always have the newest version and under his wheel. It's really cool. So we always, when he comes to the office and his car is on display, it's always brand new. So you lease it. Then if you are in business with your personally leased vehicle, you need to know the business usage percentage. Like I said, that is calculated based on mileage. So whether it is 10,000 miles a year, then you drive 4,000 miles for business purposes. How do you prove that is for business purposes? Go back to the 5 elements I was talking about. So you must have the date, the purpose, the beginning, the ending, the total mileage to calculate that so you know what is your business mileage. With that percentage, you can calculate the percentage of deduction onto your business expense, right? So now, of course, you could also use actual method versus mileage method. Mileage method is simple. Forget about leased or not leased. You just count your mileage, right? But if it is actual, then you use percentage of the lease amount, and all the other expenses go percentage. That's how you deduct it. But what about the one that lease to own? The only difference in that is you will use percentage of the business use to calculate depreciation as well, because you would have your vehicle as your asset for partial asset for the business, right? You cannot use mileage and also with depreciation, because the mileage itself has already calculated all the expenses, insurance, depreciation. It's all kind of considered within, so you cannot duplicate those expenses. But what about you bought it with or without loan? Of course, that's a personal loan, right? So you don't report anything on the personal loan other than the loan expenses. If it is personal use, if it is business use, you know the percentage already for business use. If you use actual method, you can deduct the interest on that car loan percentage-wise. Otherwise, you go for mileage, it's all the same. You see how the method paying for the car has something to do for your deduction. So folks, I want you to be super clear. And if the car becoming yours, then you have these actual mileage ways to deduct it. So the actual calculation might be a little different, just depends on whether you own the car or not, right? But if it is a business expense, if it is a business car, suddenly, and you have this deduction difference, but it is not about what you deduct, it is about depreciation, right? If you lease to own, you can depreciate. If you bought it outright, you depreciate. And if you got a loan to buy it, you depreciate. That interest expense is 100% deductible. So this is where how the method of purchase would deviate how you deduct, right? Now, let's look into something specific and becoming a more popular question on the open market. And if you type leasing versus buying a car, there's just a bunch of professionals would come up to give you pros and cons. But I want to just kind of reiterate some of what we talked about earlier in a more organized way on specific points, so you would remember. I'm trying to impress your memory and impress your recollection so you can pull out that knowledge when you were asked that question. So condition of leasing is basically when you rent the car, and is it just treated as expense, or it is actually treated as an asset. So that is a very different treatment we covered on the previous map right here, folks. And whether you lease it as leasing or you lease it as to own. So that is related to that. So in the leasing world, that is critical because that triggers your tax to be different, folks, okay? And of course, I listed pros leasing a car, cons leasing a car, pros buying a car, cons buying a car. It's very common knowledge, but I just want to list it here for you to view. A lot of times, business who lease the car instead of buying it is more of cash flow concern. So of course you deduct a big time, but the outright payment is also big when you buy. But if you lease, normally there's no big payment. So a lot of business, when they're operating, they're operating a cash tight operation, then leasing a car is always a better route than buying a car. Other than the example I gave you, someone just love to drive the newest model, right? And in the business community, and we believe that we're more efficiency focused, we're more bottom line focused. So now if we can save our cash from here and then invest them in inventory, then creating more sales, then of course we don't want to spend all the money on cars and we want to shrink it as much as possible. So leasing is sort of like that great vehicle for that, okay? And so the key cons for leasing, it is actually the terms on the lease. Sometimes the leased car has a limitation on the mileage. Once you go over that mileage, it's a huge expense. Then if you look at your total lease payment, you'll be wondering like, I just might as well just buy a car because I'm paying so much, right? So those are things you want to consider. But buying a car for tax deduction, and that is really more people are eyeing on. Like more people are looking at purchase a car and do deduction even if you loan money. Because when you loan money, even though you didn't come out with cash, but you borrowed money, right? You borrowed money on our balance sheet. What is that? That's a credit for car loan and debit for car asset, right? But once it's landed on the asset, right away, depends on how you use the car. Let's say if you are a taxi company, then you literally can deduct 80% of that car because it is a bonus depreciation eligible. It's a listed property. But let's say you're not. You're a restaurant. You're just one of the owner. You just bought a new car. But your car, you bought it under business name because not only you drive it, your delivery boy also drive it, right? So you leave the car in the office all the time and they use it. So with that said, it is a company car, and then when you bought the car, and we deducted right away as a business vehicle. And the beginning, the first year deduction is $20,200. It really just depends on what car you buy. If the car is a high value car, say you bought a sport vehicle and which cost $85,000, and then you use that for delivery. And if I defined, if you wrap around that car saying that's a delivery car, and then you could qualify for bonus depreciation. But if it is a passenger vehicle, you use it, people use it, a company use it, then you at least can deduct $20,200 in the first year. That's a huge deduction, right? So buying a car, outright buying the car, that would give you that advantage. So you can treat it right away, even though you didn't pay for it, it's a loan. So with that said, and let's look at the pros of buying a car. So this is you have your long-term cost, lower your long-term cost. I'll say yes, maybe, and depends on how, I have a client who bought a new car. Man, they just go back to fix that car for so many times. So they live without that car for a period of time. And because it's new cars under warranty, so the dealer will not replace a new car. So they just have to stick with that car and waiting for it to be repaired. So I'm not even sure that would fit into the long-term saving. So that car seems to be a very bad buy. And of course, in that case, you kind of wish you just leased it, right? So you can return it. So in this pro of buying a car slides, and I have listed the deductions of the car. So you can see that it's $20,223 for the first shot, and for the second shot, and you can go as much as $19,500. The third year can be $11,700. Just depends on how big your car is, right? How expensive your car is. So these are the depreciation that you can take advantage of. If I say that if your 2023 is a profit-making year, and definitely think of getting a vehicle to achieve this deduction and also treat yourself for a nice drive, right? So this is con of buying a car. I flipped this a little earlier for you. So this is, nothing really new. It's an upfront cost. It's, cash high if you don't borrow money. And eventually you will be paying for repairs, so you maybe want to stay on the actual method. So typically my my idea for my clients in terms of choosing from actual expense versus standard mileage deduction, which one do we choose? Like if you ask me that question, my first question back to you is, whether your car is an old car or brand new car. So you may say, oh, it's a brand new car, then I would tend to go for mileage because that will yield more deduction. But if you tell me that it's a second-hand car, only had a 3 months warranty, then I probably leaning towards to the actual, just because if you broke the car and the repairs can be covered, right? Of course, nowadays I also ask, is that an electronic car or not? If it is an electronic car, folks, no matter what, if you have an electronic car, I want you to put it under your personal name and do mileage claim for business use, because that is the best deal. You're also going to get your tax credit because you are having that electronic car reported under your 1040. Okay, so that is actually my last slides. I just want to mention to you, when we get there, we talk about that again. So here is my cons of buying a car, like the drawbacks. So now I want to go to actual expenses and the standard mileage rate. So in this one, I want to review our chart again. So remember, the standard versus mileage are all available for personal owned vehicles that used for business. So if you are a small business owner, you know that you're eligible for that deduction even though your car is not under business name. Okay? And of course, if it is under business name, your actual is actual, you know what to deduct, everything related to the car, gonna deduct. But if it is personal, we sort of go into this method talking. Now, depends on how we paid for the car, so our method might be different. If you look at the last row of the boxes, so it is like the actual expenses plus depreciation, sorry, not deposit, that's depreciation, I wrote it wrong. And then, these are all the method we use, mileage, actual plus depreciation. So you sort of get a feel of how that works. And in another word, you want to look at your vehicle, ask yourself, is this vehicle is only for business use? Then you say yes or no, right? Is it only for business use? You say yes, only for business. That goes to the entire cost of ownership and operation should go to our left hand. Remember, you can change your vehicle title, your vehicle ownership to company if it is 100% for the business. I don't want you to keep it under your personal name. Okay? If it is not, maybe not. So that means it's not. If that is the case, you have two ways to deal with it. You have actual expense or mileage. So let's look at the mileage. The mileage for 2023 is 65.5 cents per mile. Quite high. So imagine if you bought an electronic vehicle and you are claiming mileage on this, 65.5. Do you really gonna spend that much on per mile? Of course not. So this is still a time to take advantage of electronic vehicle. Doesn't have a separate mileage rate. So the government hasn't really come around. They're too busy at indicting presidents. So it's like they haven't really got there yet. But this is the time, the business owners, if you bought an electronic vehicle, put it under your personal name, claim mileage on the business use. Okay? And this one can generally use this whether or not you are reimbursed. So basically what we are seeing is that when you have a mileage deduction, sometimes your business, if you are partner with somebody, there's a partnership, right? Then maybe the partnership will agree that none of us gonna deduct mileage. Okay, you don't do it, I don't do it, forget about it, we don't do it. In this case, folks, you can bring the mileage over to your Schedule E. Okay, don't forget it. If you are a partner of a partnership, you can deduct all your business expense in your 1040 under Schedule E. And I know a lot of people don't know about that. I just want you to hear me. If you want to explore any of these statements I have here further, of course, you go on our website and click schedule a time with me, and we can dive in just for your special situation. And you cannot use standard mileage rate. If you want to use the standard mileage rate, you must choose to use it from the first year of this car is in duty. So as soon as you put the car on your tax return for that year, the method is set in stone. So, it's almost like, you choose your destiny and you can't change it, okay? So that's what required. Then, of course, you cannot revoke your choice unless you sell your car and get a new one. And other things to keep in mind is that the mileage total, how you keep the mileage, and you may have 3 cars you're driving and you keep 1 mileage log. So when you do tax return, you are trying to be simple. You give 1 car and with a total miles. You're not lying, but that car doesn't have a total odometer reading of that total mileage. IRS auditor will deny your claim. So that means you cannot commingle your cars. You can have up to 5 cars in the running. So you can have 5 cars all doing mileage claim. But the total odometer reading within January to December has to be more than what you claimed as business miles. Make sense, right? That is really important. So in my next slide, I did say that cannot use for 5 or more cars at the same time. All right? You cannot, it says that you must not claim depreciation deduction for the car when you are using mileage deduction. And it mentioned about Section 179 deduction, folks. And this is where sometimes when you buy a car, I heard one of my clients came to me, goes, Ying, I bought a car over 6,000 pounds, and they told me that I can deduct the car 100%. So they came, my client came with a very big smile because that car cost $89,000. So he thinks that he can deduct the $89,000. And I'll tell you, no. I'll tell you, may not be. Depends on what you used our card. Let's say if that vehicle you bought for $89,000 is a freezer truck. It's a listed property. It's a working vehicle, not a passenger vehicle. Then, yeah, you can deduct the whole thing. The Section 179 will allow you. But Section 179 also tell you that, well, you can deduct it, but that $89,000 you deducted cannot create loss. If you only made $50,000 profit, you deduct $89,000, you have a $49,000 loss. The Section 179 goes, no, you cannot go over that. So alternatively, you would do bonus depreciation. But 2023 bonus depreciation is only 80%, not 100%. So it is not as easy as a yes or no answer, folks. You want to see how you place the car in the business. So if you are saying that I'm a real estate agent, I bought that car. It's over 6,000 pounds, and I am going to deduct it all because it's a business vehicle. Then the measure would be that, okay, so it is your company vehicle. Company people can drive. And you have your own vehicle. And you don't drive that for personal purposes too long and too often. Right? If you can go that far, yes, you can depreciate it. But what if you say, well, no, that's my vehicle. I drive it, but I am working all the time. So all of my drive is business drive. You can debate that, and you can do what you want to do. I'll tell you, if you get audited, the auditor has every right to say that's not good. I don't like it. And you're not going to go to jail because, I would consider you didn't lie and you just did the taxes, you're just leaning towards to your side a little too much. And then, you don't have a criminal record. You're not going to be charged with civil penalty, but you would be charged with accuracy-related penalty, and you will be fined for not treating that as a properly, deducting too much, right? So these are the mileage, standard mileage method limitations, or things that you really need to know. So what about the actual expenses record keeping? Okay, fine. I'm doing actual, but do I have to save every gas receipt, every car wash? Really? Yes. So all of these you need to save. A lot of the best practice I see with my client, they actually have a credit card for that car. So when that car goes out for service, the credit card is inside of that vehicle. So whoever drives that car would use the credit card to put in the gas, to buy, to buy things that supply to the car, maybe windshield, water, and things like that. So it keep that credit card as a vehicle expense. So if you want to fix that vehicle, you also use the credit card. So that gives you the actual expenses in one location, right? So that would be a good practice. And I would recommend for all of our business owners to go that way. All right, now let's just briefly touch electronic vehicles because this is kind of new, but I want you to know. You can claim tax credit, $7,500 in 2023. That is your last year. I say that is your last year because next year, according to that Inflation Reduction Act back in August 2022, and on the act, it says that after 2023, starting 2024, they're going to give that credit to the dealership to handle. They are going to process that now. I don't know exactly how it will show up on your refund. I think it's just going to be a reduction in price to show you that, oh, we reduced this vehicle by $7,500, so you can buy it. That's like, we can have the car reduced by $7,500 without even using the tax credit as a name, right? So now 2023 is really the last year for any one of you wanting to buy electronic vehicle, still enjoy that tax credit. It's a big deal. It's a tax credit, folks. It's not tax deduction. But when the dealership goes back to you, it's actually tax deduction. It's not tax credit. Tax credit, that means you have so much more. You have more than $100,000 income would generate $7,500 tax. Then you reverse that tax dollars, means your tax deductible out of the income is $100,000, not $7,500. So tax deduction and tax credit are very different. And the tax credit also has refundable, non-refundable, and this is refundable, just on top of the world. So make sure you take advantage of that, right? That's why I put in this last slides, because I'm just so worried about people thinking the $7,500 is forever theirs, sooner or later, and they can buy it later. No, they're changing the rules. And of course, I might be misspoken because the dealership gonna give tax credit. I just couldn't believe it because, you don't just get a piece of paper, call that tax credit. Maybe they do, but what I am concerned is that it's going to become a reduction of your vehicle price. That is not a tax credit deduction. That is a tax deduction. That is an income reduction. All right. With that said, and we concluded today. And this is our firm's 3 p.m. webinar on Saturday. And you will see us every Saturday at this time. If you just happen to not knowing how to spend your weekend, by the way, I have a lot of ideas for you to spend your weekend. But if you're just so boring and have no place to go, you come over here. So this will make you a tax expert after listened to me for a long time. And Catherine at communitycpa.com, it is our marketing manager, so she actually handles the topics. People call her or email her, let her know that, hey, I want to hear this, and can you talk about market, and can you talk about inventory, cost method, and stuff like that. And we go online and to just talk about it with very simple English. And you now know that I don't speak complicated vocabularies, and it's really just understanding, and with logic, it will just clear your mind with what you need to know. And our phone number, that's our main number, 515-288-3188. And we open 6 days a week, Monday to Saturday. Yes, we're not slave drivers making people work 6 days a week, but we have 2 shifts, people from Monday to Friday, Tuesday to Saturday, to make sure that we cover the 6 days a week. And we want to be the CPA firm that very different from other. Not only we collectively speak 9 different languages, and we also are the people who are open on Saturday. So just different, right? All right. So that is all for today, and I will see you again. And click subscribe and subscribe to our channel, and I will see you again and again.